think about how you get around your city. I mean, it wasn't that long ago that your main options were pretty standard, right?
Yep.
Your own car, maybe public transport, or a taxi.
Mm-hmm.
But things are evolving so rapidly now, aren't they? It really makes you consider what the future holds for just owning a car and how we'll navigate our daily lives.
Exactly. And that's really the core of what we're trying to unpack today. We're diving into this burgeoning world of shared mobility,
Right.
which is basically this expanding network of transport choices that you access when you need them rather than, owning them outright.
Okay.
So picture ride-hailing apps right there at your fingertips, car-sharing services for maybe hourly rentals, those bikes and scooters you see kind of dotting our urban landscapes.
They're everywhere now.
They are. And also the growing integration of all these options with our existing public transit networks. It's all coming together.
Precisely. And to get a handle on where all this is actually heading, we've got a fascinating industry report. It focuses specifically on the global shared mobility market. So our mission for this deep dive, really, is to pull out the crucial insights from this report,
Right.
especially looking at the landscape in 2025 and, beyond that.
Okay.
We're talking key trends, how things differ across regions, and just the overall trajectory of this, significant market.
Yeah.
And when we say significant, I mean the report projects a global market size of a staggering $312.84 billion. Just in 2025 alone.
Wow.
Okay, so let's get into the details.
Yeah, that initial figure really does set the stage. The report, it's from Cognitive Market Research, confirms that $312.84 billion market size for 2025.
Right.
But what's really fascinating here is the projected growth. I mean, they anticipate this market just exploding to over $1 trillion, USD 1.05 trillion to be exact, by 2033.
$1 trillion.
$1 trillion. And that translates to a compound annual growth rate, CAGR, of a pretty substantial 16.40% between 2025 and 2033. That $1 trillion figure isn't just like a big number. It really signifies a fundamental shift in how people view transportation, potentially moving away from personal car ownership as the default, especially in cities.
16.4% CAGR. That's not just steady growth. That's real acceleration.
It is.
And just for context, for anyone interested in the timeline, the report specifies 2024 was the base year for these calculations. They looked at historical data from 2021 to 2024.
Right.
2025 is their estimated year, and the forecast goes out to 2033. So what are the primary forces driving this incredible expansion?
Well, there are several key factors really at play. First and foremost is urbanization. It's simple, really. As more of us live in cities, traffic congestion just becomes a bigger and bigger problem.
Tell me about it.
Exactly. So shared mobility offers this, compelling alternative to the hassles, the expenses of owning and maintaining a private vehicle in a really densely populated environment.
Yeah.
And we're seeing this manifest in various ways, like Grab's acquisition of Transcab in Singapore.
Oh, interesting.
Yeah, and this isn't just a ride-hailing company buying a taxi service. It's more strategic. It's about integrating different transport modes to create a more kind of holistic solution for commuters.
That makes perfect sense. I mean, if you're constantly facing gridlock, the idea of just using an app to get a ride, that seems very appealing.
Definitely.
What other factors are fueling this growth?
Well, the growing global emphasis on sustainability is another huge driver. There's just increasing pressure from governments, from consumers to lower carbon emissions.
Right.
And shared mobility, particularly, with the increasing adoption of electric vehicles, it aligns perfectly with those objectives.
Yeah.
When multiple people use a single vehicle or they opt for electric scooters and bikes, it just inherently reduces the overall carbon footprint compared to everyone relying on their own, say, gasoline-powered cars.
Well, absolutely. Every time you see more of those e-scooters zipping down the street, it does feel like a sort of tangible move towards a greener future.
It does.
But are there any potential hurdles, any roadblocks on this path to widespread shared mobility?
Oh, absolutely. There are definitely restraining factors. Infrastructure limitations in certain cities can be a pretty significant challenge.
Like what?
Well, a lack of dedicated lanes for shared vehicles, maybe insufficient parking areas, or even just a limited network of charging stations for EVs, that can really impact the efficiency and, the dependability of these services.
Okay, yeah. Reliability is key.
It is. And additionally, in cities where public transport isn't maybe well established or integrated, shared mobility options might struggle to offer that seamless kind of end-to-end journey that users expect.
Right.
And somewhat ironically, I suppose, in really severely congested cities, even shared mobility services can just get stuck in traffic, which might push users back to other alternatives.
So it's almost a chicken and egg thing in some places.
Right.
You need the infrastructure to support the growth, but maybe the growth justifies the investment in the infrastructure.
Precisely. It's a balancing act.
Okay. Now, the report also highlights some key market trends. What stands out to you in that area?
The rise of electric and sustainable mobility solutions is definitely a prominent trend, as we touched on earlier. Governments are increasingly incentivizing EV adoption through various means, tax credits, subsidies, things like that. And shared mobility providers are responding. They're investing in electric fleets and the necessary charging infrastructure.
Right.
This shift, it not only addresses environmental concerns, but crucially, it can also lead to reduced operating costs for these providers in the long term.
That makes sense. I mean, electricity is often cheaper than gasoline, right? And EVs generally need less maintenance, too.
That's right.
What's another key trend the report points to?
The expansion of mobility as a service, or MaaS, platforms, that's another really significant development.
MaaS, okay, break that down.
Think of these as unified digital interfaces. Basically, apps that bring together various transportation options, ride-hailing, car sharing, bike sharing, public transit schedules, ticketing, all within a single app.
Oh, okay. One app to rule them all.
Kind of. It empowers users to plan, book, and pay for their entire journey seamlessly. Examples like Move It, Uber's trying this, Whim in some cities. They're leading the way here.
Right.
They're trying to create this cohesive mobility ecosystem that just simplifies getting around without needing to juggle like 5 different apps or payment methods.
That sounds incredibly convenient. Imagine planning your whole trip train and maybe a shared bike for the last mile all in one place.
Exactly. That's the goal.
Now, the report also discusses the impact of some external factors, specifically mentioning something called Liberation Day tariffs introduced in 2025. That sounds rather dramatic. What exactly are these?
It is a significant factor to consider, yeah. These tariffs, as the report details them, they represent a major shift in global trade policy.
Okay.
They particularly affect electronics and electrical goods coming from countries like China and Vietnam. And these are, crucial components in everything from EV batteries to the smartphone interfaces we use to book these services.
Oh, okay. And the tariffs are substantial.
Very substantial, reaching up to 145% on some electronics.
Wow, 145%. I can only imagine that would have a pretty significant knock-on effect.
Absolutely. These tariffs, they directly disrupt supply chains for the shared mobility market. I mean, consider that many components used in EVs and related tech, things like semiconductors, lithium-ion batteries, they face significant tariff increases.
Like how much?
Well, the report mentions 25% on semiconductors, 20% on lithium-ion batteries, for example.
Ouch.
Yeah. And this inevitably leads to higher component costs for shared mobility providers, especially those trying to transition to EVs.
Right.
Even consumer electronics used in these services, like the smartphones drivers might use or the ones powering the apps, they face tariffs of maybe 10–15%. That potentially increases operational expenses, too.
Huh.
So this whole tariff situation really highlights how interconnected global trade is with, the seemingly localized issue of getting around town.
Yeah, it shows how policy decisions made, far away from city planning can have real downstream effects on our daily commutes.
Exactly.
So this drive towards EVs and shared mobility, it could face some unexpected headwinds because these tariffs are pushing up the cost of essential components.
It could, yes.
How are companies responding to this? Is the report clear on that?
The report indicates that companies are actively adapting. They have to, right?
Sure.
So they're exploring new suppliers, maybe in countries not subject to these high tariffs, and they're investigating ways to perhaps redesign their products to use components that are less affected.
Okay.
But, that kind of supply chain restructuring and product redesign, it takes time, it takes resources.
Of course.
And it could potentially slow down the rate of EV adoption within the shared mobility sector, or alternatively lead to increased costs for consumers. One or the other, or maybe both.
It's a stark reminder, isn't it, that even seemingly unrelated global trade policies can really have a tangible impact on how we move around our cities. Okay, let's shift gears a bit now and talk about the key players. Who's competing in this landscape?
Right. The report emphasizes that the shared mobility market is indeed highly competitive. No surprise there.
Yeah.
The major players are heavily focused on integrating artificial intelligence, for optimizing routes, managing fleets efficiently, also expanding their electric vehicle offerings, as we've discussed, and further developing those comprehensive MaaS platforms.
Got it. So AI, EVs, MaaS.
Those are the big areas. And some of the key competitors listed in the report include, well, some familiar names: Car2Go, Deutsche Bahn Connect.
Okay, the German rail operators involved?
Yep, they have a mobility arm. Then there's Didi Chuxing, Drive Now, which is BMW, EV Card, Flinkster, Grab, Greengo, Lyft, Uber, of course, and Zipcar.
Right. That's quite a mix. Established global players, some regional giants.
It is. It's a diverse mix reflecting the various models, car sharing, ride hailing, etc., and the different geographical focuses within shared mobility.
Okay. Now let's zoom out again and look at the regional analysis. Where is shared mobility currently most dominant, according to the report?
Currently, North America holds the largest market share. It accounts for over 40% global revenue in 2025.
Over 40%. Wow.
Yeah, with a market size estimated at USD 62.57 billion for 2025.
Oh.
And this dominance is largely down to, well, high rates of urbanization, pretty advanced digital infrastructure, and just widespread adoption of ride-hailing and car-sharing services already.
Makes sense.
The report projects a solid CAGR of 15.3% for North America between 2025 and 2033.
And within North America?
The U.S. market is the largest, USD 49.37 billion in 2025 with a 15.1% CAGR. Then Canada at USD 7.51 billion, slightly faster growth actually, 16.1% CAGR. And Mexico at USD 5.69 billion with a 15.8% CAGR.
Okay, so North America is clearly leading the pack right now. What about Europe?
Europe holds the second largest market share. It's got over 30% of global revenue.
Yeah.
That translates to a market size of about USD 57.88 billion in 2025. And the projected CAGR for Europe is also pretty respectable, 15.2%.
And the key markets there, UK, Germany.
Exactly. The UK is significant at USD 9.72 billion with a 16.0% CAGR. Germany is even larger, USD 11.46 billion, 15.4% CAGR. And France comes in at USD 5.32 billion with a 14.4% CAGR.
Okay, so strong showings from both North America and Europe. Definitely established markets. Now, what about the rest of the world? Where is the growth really taking off?
That would be the Asia-Pacific region, or APAC. That's where the report projects the fastest growth.
Right.
While their current market share in 2025 is around 23%, estimated at, let me check. Actually, I seem to have conflicting numbers here from the outline compared to the previous section. Let's stick with the growth rate. The anticipated CAGR is a rapid 17.1%.
17.1%. That's the fastest yet. Why so fast there?
Well, it's driven by really rapid urbanization in many areas,
Oh.
increasing smartphone usage, which is key for accessing these services, and strong government support for smart transportation and electric vehicles in many APAC countries. Key players there include China, obviously huge, with a market size projected around USD 68.98 billion and a 16.6% CAGR. India is notable, USD 16.42 billion, but look at this, an impressive 19.0% CAGR.
19% for India. Wow.
And Japan at USD 22.67 billion with a 15.6% CAGR. You know, those key drivers we mentioned earlier, urbanization, sustainability, they're particularly pronounced in APAC, which helps explain that really impressive growth rate.
That 19% for India is definitely noteworthy. It really sounds like APAC is the region to watch for future expansion.
Absolutely.
What about South America, the Middle East, and Africa? How do they fit in?
Okay, so South America has a market share of just over 5%, size around USD 10.95 billion in 2025, but still a strong projected CAGR of 16.9%. Brazil and Argentina are significant markets there.
So growing fast.
Yeah, the Middle East currently holds around a 2% share, about USD 11.26 billion, but also a very strong CAGR projected at 17.2%. Saudi Arabia and the UAE are key countries driving that.
Even faster than APAC on average.
Interesting. Slightly, yeah.
Right.
And Africa, while currently having the smallest market share at around 1%, that's about USD 5.94 billion in 2025, still shows solid growth potential with a CAGR of 16.6%. South Africa and Nigeria are notable markets mentioned.
It's fascinating, isn't it? Seeing those varying growth rates and market sizes across all these regions, it really highlights the diverse patterns of how shared mobility is being adopted worldwide.
It really does.
So, okay, we've got this global picture, varying levels of adoption, different growth speeds. Now let's drill down a bit within these markets. The report also breaks things down by different segmentations, right? Like types of services, business models.
That's right. It slices the market in several ways. One key segmentation is by sector type. Unorganized versus organized.
Unorganized, what does that cover? Like informal stuff?
Exactly. It includes informal ride sharing, local taxis you might just flag down, things without a sort of centralized app or maybe strict regulation. And currently, this unorganized sector actually holds the dominant share, particularly in developing regions.
Okay, why is that?
Often due to less stringent regulations, maybe a prevalence of cash-based transactions, just long-standing habits.
Right.
However, the report identifies the organized sector, think your Ubers, your Lyfts, the app-based players, as the fastest growing segment.
Okay.
And that's driven by their structured operations, regulatory compliance usually, and of course the convenience of their digital platforms.
That makes sense. While the informal options might be widespread, the reliability and ease of use of the organized players are likely attracting more and more users.
Exactly.
What about the different types of shared mobility itself? Ride-hailing versus car sharing, etc.
Yeah, so in terms of shared mobility type, ride sourcing, which is your traditional ride hailing, booking a private ride through an app that currently holds the largest market share, mainly due to its accessibility and convenience.
Right. It's often the first thing people think of.
It is, but ride sharing like carpooling options, where you share a ride with others going in a similar direction that's experiencing rapid expansion.
Because it's cheaper, presumably.
Often, yes, cost is a big factor. And then vehicle rental and leasing and other private options also contribute to the overall market mix.
And how is the market split by business model? You mentioned B2C earlier.
Right. The business to customer or B2C model has the largest share right now. That's companies directly offering services to us, the individual users.
Standard model.
Pretty much. However, the passenger to passenger or P2P model, where individuals share rides, maybe rent out their own vehicles through a platform that's seeing rapid growth.
Like Turo for car rentals or BlaBlaCar for ride sharing.
Exactly, those kinds of platforms. It's driven by cost efficiency for the user and obviously increasing trust in these peer-to-peer platforms.
Interesting. So we're seeing both the established B2C models thriving, but also these newer P2P approaches really gaining traction.
Definitely. There's space for both.
What about the types of vehicles being used? Is it all cars?
Not entirely, though. Passenger cars currently make up the largest share of the vehicle type segment. They are, the backbone of many ride-hailing and car-sharing services. But the micromobility sector, think e-scooters, shared bikes, that's the fastest growing segment, especially for those short-distance urban trips, the first or last mile.
Yeah, you see them everywhere in cities now.
You do.
And finally, how does the report segment the market by propulsion type? Gas versus electric.
Unsurprisingly, I see engine vehicles, those powered by internal combustion engines. Good old gasoline and diesel, they currently hold the largest share. Still dominant. But battery electric vehicles, BEVs, are the fastest growing segment. That reflects the whole industry push towards more sustainable options that we talked about.
Okay, that paints a really comprehensive picture. We've got the overall size, the growth, the drivers, the trends, the regions, and how it all breaks down.
It's a lot to take in.
It is. Now, the report includes an author's conclusion with some key takeaways. What are the main points they really wanted to emphasize at the end?
Right. The author reiterates that significant CAGR, 16.40% projected globally between 2025 and 2033. They really underscore the substantial growth that's expected.
Okay, growth is message number one.
Definitely. They also highlight the dominance of the business-to-customer B2C segment, mainly because of the convenience it offers users through, easy app-based booking and cashless payments.
Convenience is king.
Seems so. And finally, they point out that passenger cars still hold the largest market share within the vehicle type segment, just reflecting their continued importance in the whole shared mobility landscape, even with micromobility growing fast.
Got it. So to sort of wrap it all up then, this deep dive into the report really reveals a shared mobility market that's not just growing, it's experiencing explosive growth, as you said. We're seeing these major shifts driven by urbanization, a really strong push for sustainability, and these exciting trends like the rise of EVs and those integrated MaaS platforms.
Yeah.
And while external factors like those tariffs could present some challenges, the competitive landscape is clearly dynamic, and different regions are showing really unique growth patterns. It really makes you think, doesn't it, about how these trends might influence your own transportation choices in the years to come, and just the fundamental structure of our cities, our urban environments.
And maybe this raises a significant question for you, the listener, to consider. Given this increasing interconnectedness of all these transport options and the rapid advancements in technology, What do you think will be the single defining characteristic of how we navigate our cities in the next decade?
Mm.
Will it be ultimate convenience? Will it be unwavering sustainability? Or maybe it's an entirely new factor we haven't even fully grasped yet?
That is definitely something to ponder. And, if you're keen to explore this topic further, maybe consider the wider implications of those tariffs we discussed,
Yeah.
not just on shared mobility, but on the broader technology and transportation industries.
Yeah, it's a complex web.
It really is.
Yeah.
Understanding those interconnections is probably crucial to truly understanding the future of how we all move.